by this, we're actually bridging over to Africa and Middle East. I think, as many of you know, we were supposed to have a physical conference in May. That didn't happen, and then we had to make it digital instead, which is of course amazing because now we can actually do a truly global conference. So we divided these different tracks in our here on our main stage. So you already heard from Nordics and European, kind of some of the real movers and shakers, and now we're moving to Africa and Middle East. So we have over 40 countries here in total, and then we have a lot of representation in this next panel. So we'll hear more about the great things that are occurring now, and that is increasingly becoming sort of the trademark for the regions, which is leapfrogging and innovation, and especially also, of course, inclusion. So I would like everyone to, of course, get an opportunity to introduce themselves, but I will start with introducing and welcoming the moderator, the editor-in-chief at Capital Edge magazine in Nigeria, so Stella. Warm welcome to all of you, and I will leave the word over to you. Oh, we can't hear you.
Sorry.
Oh.
Can you hear me now?
Perfect. Let's go. Thank you.
Okay. I'm Stella from Nigeria, and I'm the editor-in-chief of Capital Edge magazine. It's an investment/capital magazine that is structurally based on the capital investment. So I'll be introducing my people here, my team. Eric is one of us from the country. Okay, we have Adam, we have Faisal, and we were supposed to be four. Yeah, hi, Eddie. So our major topic today is inclusion, leapfrogging, and innovation, basically on Africa/Middle East, from the Africa/Middle East perspective. So I would like Eddie to...
Hello, everyone.
Yes, your idea. Introduce yourself.
Hi. First, just Suad, I think you need to just mute and speak. That's all from your side. That's all.
Oh, okay.
So, hi. My name is Eddie Aboud, and I am the CEO of GBM in Oman. GBM is a leading system integrator in the region. And we are focusing more on the digital financial services within the financial industry and within also the institutions. So I've been in this domain for the past 22 years, and typically spread between Europe, Middle East, and Africa.
Okay, Adam. Can you introduce yourself? We can hear you, Adam.
Adam, I think you need to unmute.
Sorry about that. Good morning, good afternoon, wherever you're dialing in from. My name is Adam Bornstein, and I work with the Danish Red Cross on the Innovation, Finance, and Systems Change team. I was based in Addis Ababa for about 2 years, but now I'm back in the United States. And most of my background's in combination of private sector and humanitarian assistance as well as development. Nice to be here.
Eric.
Thank you, Stella. It's a pleasure to be on. My name is Eric Osia Kwan, and managing partner at Tanzo Capital. The Tanzo Capital is a venture and growth fund based out of Mauritius. We have offices in Accra, Nairobi, and Johannesburg. We essentially invest in tech and tech-enabled ventures across Africa. Our first fund, we invested in 16 companies in total. We essentially look at companies within Kenya, Ivory Coast, Nigeria, and Ghana, which we call kings. Ghana and sorry, called the kings country. And then we focus in sectors like fintech. So, and I think that that's the essence of this panel. We also have investments in edtech, agtech, cleantech, and healthtech.
Okay, thank you, Eric. And Faiza.
Hi, everyone. My name is Faisal Haqqi. I'm the managing director of AB Ventures. We're the corporate venture capital arm of Jordan's largest bank, Arab Bank. We're a fairly new outfit. We've been around for about 2.5 years. We invest globally in early stage financial technology businesses. Obviously with the mandate to create a return, but also to create an impact and the benefit to the financial institution itself, Arab Bank, and to the larger financial ecosystem in the markets where Arab Bank operates. I've been in the industry for about 20 years now, worked at multiple early stage investment firms, and I typically describe myself at the intersection between technology and financial transactions.
Thank you, Faiza. We're going to be starting with the first one, which is inclusion. And Faiza has been in this industry for a long time. He's been an accelerator almost all his life. Let me not say almost all his life, but he's been an accelerator from startup to finish and helping a lot of businesses grow. So he's going to be taking us on inclusion. And Eddie and Faiza, Eddie, Adam, and Eric can contribute to whatever he says.
Thank you, Stella. I mean, for the sake of time, this is really a very wide and deep topic, so I can spend hours talking on it. I won't do that. I'll just give you a quick example of how technology can facilitate the inclusion of the underbanked and the underserved segments of markets, particularly in developing and emerging markets. So about 3-4 years ago, prior to joining AB Ventures, I did a survey on the consumer and retail banking services in Jordan. And at the time, the banking penetration, or the number of people who had bank accounts in Jordan, was hovering around the 30%. I think the number is now probably around the 40%. But across the Middle East, it's more or less 2/3 of people not having access to basic financial services. And the number one reason at the time for people not having a bank account was that either their employer hadn't asked for it, or the main purpose for having a bank account was never there. And typically that main reason is having an end of month salary being transferred into your bank account. So what that told us is that a lot of people were actually running their day-to-day businesses and running their personal finances using cash, and that remains a reality in the majority of these markets. So when we dig a bit deeper, it sort of revealed to us that the traditional financial institutions, aka banks, typically avoid servicing clients that do not meet a certain minimum threshold in terms of volume of transactions per month, because the way traditional financial institutions are structured is prohibitively expensive to be able to efficiently and feasibly service the low end of the market. And when you talk about the low end of the market, in most of the North African countries, that constitutes around 70-80% of the workforce. So there was a clear indicator that because these cost structures were so high, banks would never touch clients at the bottom of the pyramid. Hence, the usability of technology. Technology has proven time and again that because it basically sheds the physical aspects of offering a financial service, it sheds the massive overheads attached to it. It's able to automate and digitize a lot of the processes around a conventional financial transaction. It can actually deliver that service at a fraction of a cost. And when I say at a fraction, it really is at a fraction. It's typically no more than 10% than what you would incur for the same transaction if you were to conduct it through a physical channel. A perfect example in Jordan is the national payment bill representation and bill payment platform, Madfu'atkum, which is a company that I invested in when I was managing Oasis 500, Jordan's largest accelerator in technology. That company effectively, it created the impetus and the reason for people to have an account, not necessarily a bank account, either a wallet or a prepaid card, because that is a big facilitator for bill payment and bill representation for the majority of the population who at that time had only the option to actually physically go into the offices of the bill issuer and pay those invoices. So, the examples are many and they're quite spread apart, but I think at the core of them, it's the fact that if you want to include people into the financial services industry, there are a lot of tricks and triggers to that. But I think ultimately the driver for that from the business side is the ability to offer a high quality service at a reasonably affordable cost to both ends.
Okay, so what are the challenges financial technology face in financial inclusions?
I'll leave the floor to other people to answer if they want. I can take that. Eddie, we can't hear you.
All right. We're working. Perfect. Thank you, Faisal. Thank you, Stella, for the opportunity as well. Faisal, beautiful introduction, and you set the ground very well to discuss even the technologies that are available for the majority of the population to embark on. Since also this is a Middle East and Africa more type of engagements and the struggles that we're having. We've noticed that the majority of the population are no longer waiting for the financial institutions to come up with new models and new channels. They want to be there. And for them to be there, and the majority of them in the developing and the emerging markets, they need to have access to funds, they need to have access to bank accounts, they need to have access to all those. And you mentioned, Faisal, something very beautiful, which is the underbanking. And this is maybe typically where you'll see the leapfrogging coming forward. It's like literally you need everyone to be on board to create a proper economy. Many struggles we're facing in the region, and I can note typically 4. Based on my experience with the engagement with the financial institutions for the past few years and across the Europe, Middle East, and Africa. The first one is the structural impediment to the development of the financial and the banking systems that go well with what is required beyond just the adoption of the digital, digital technology tools. The second one might sound very much traditional, but still not many organizations, especially the financial institutions, are adopting the digital transformation at its best. So the readiness also for them to be able to give such service to the population is still a struggle with the vision on the digital financial services to be provided. The third, I think in this region, especially maybe due to the political structure of the countries, the people's voice, that the need they require such services is not very much loud. And I think this is one of the major contributors to the lack of presence of such services. And the last one, which is also extremely difficult, but is essential, where Europe and the US, they embarked on a very early stage, which is the data collection. and the use. So this is a collection that's set for the purpose of the financial transactions, the integration between the organizations, and to put it to use on what those customers need. So the data also is something very crucial that is in this region. There is a big gap with this use.
Okay, seems we are running out of time. Please, we have to take the speech, cut it a bit so that we can fit into the time given. I would like Eric to take us into leapfrogging, because we can't go through all our questions because of time. Hi, Eric.
Sure. So I think that my response is sort of on the leapfrogging angle. So if you take the landscape globally, probably Africa was behind the rest of the world. But through mobile, and to some extent, to a very large extent, mobile money, Africa has leapfrogged into the forefront of fintech. But that today, a lot of the innovation that you see globally are based on mobile money. So for the sake of our audience, mobile money is basically a system in most African countries where customers who prepay their airtime are able to convert that money into digital currency on their phone. And it basically sits on the mobile network. And so with that digital currency, they're able to make transactions, and it's SMS-based. So it's very pervasive. So today in Africa, the mobile operators are really the banks because they have most of these customers who use mobile money. For example, in Kenya, Safaricom has about 75% of the market. And all of those people, all those customers are on mobile money. So Safaricom is really the threat to the banks and not the banks among themselves. And so this fundamentally means that how banking is offered in the African market going forward is going to be very different. And so a lot of innovation that you see, for example, Stripe, is based on mobile money, the mobile money concept, right? And you're going to see more of such innovations around the world that leverages mobile money and other concepts from Africa when it comes to financial inclusion to deliver solutions. I'm going to give one more example of leapfrogging that we have in our own portfolios. We invested in a company called FinAccess. So FinAccess basically provides the technology necessary for mobile lending. And basically, as you know, in Africa, a lot of cooperative lending happens. So in Ghana, we call it Susu. In Kenya, they call it SACCOs. In South Africa, they call it Stockpos, where communities that know each other band together, save money, and lend to each other for their own business and individual purposes. And this happens informally across Africa. So what our company did, FinAccess did, is build a platform that digitizes this whole transaction that before was not digitized and is very informal and is based on word of mouth and trust in each other. But now we build a whole digital platform using blockchain technology that allows these communities to still do the same transaction by using their mobile phone. So this is an example of how you can leapfrog and create inclusion. And essentially, this is some form of banking, but sits outside the banking system. In Kenya, the SACCOs control about $7.5 billion that the central bank does not see. So suddenly, we are going after these markets. And this is really the informal markets, the communities that you don't see in the formal banking sector.
Okay, thank you, Eric. Adam, do you have anything to add to what Eric has said?
Yeah, thank you. I think that the leapfrogging is very contextual. And in a pure finance perspective, you could say moving from a USSD phone to 5G, right? Just getting everything else in between. In humanitarian context, when we think about leapfrogging, we think about it in kind of two prongs. One is around the humanitarian approach, which is communities that are vulnerable and fragile to a point where they are resilient and self-sustainable, right? And so at the same sense, how do we use what our funding streams are in the Danish Red Cross and the Red Cross movement, which could be like a cash transfer for which we do $1 billion a year, to support this leapfrog effect, to support inclusion and access to finance. And one of the big issues that we were sort of talking about in the former question is around liquidity. How do you get liquidity into these communities, and how does liquidity stay in these communities? And we can provide different types of tools and solutions for this, but ultimately it's really the people in the communities that need to take the ownership. And so the way we look at this kind of approach is to say, how do we bank the unbanked without actually using traditional banking systems, right? For example, SWIFT, like that is so archaic. Why even bother with SWIFT anymore? You don't need it. And so the Danish Red Cross, for example, with the Norwegian Red Cross, the Kenyan Red Cross, and partners like Grassroots Economics on the ground, we think about how we can use blockchain distributed ledger technology to facilitate these transactions, to use our cash transfer to drop it into the communities, like, for example, in Mukuru, in Nairobi, during a COVID response, where we can use the cash reserves that we're using for like response to seed a crypto token, an e-token of sorts, right? And to allow that token to continue to circulate within the community, to prevent that money from leaking out of the system, and then to support like behavior change and targeting types of interventions. So when we think of leapfrogging, we think about it in a humanitarian context, but also in a way to kind of use what the local communities have. For example, chamugs and round robins and community groups. How do we keep it so local that one day the Red Cross won't be needed to go in there and support these communities? That's kind of what we look at. Resilience is really important. Over.
Okay, Faiza, do you have anything to add to this?
Yeah, I'll give another example on on how you can transition a market. I don't want to say almost overnight, but you can leapfrog it from one status to another in a very short period of time. About 2 years ago, I was on a trip to the Indian Silicon Valley, Bangalore, and I met the guys who were behind the Netflix of India. And they mentioned to us how they were struggling with the uptake of the service among the majority of the Indian consumers or consumer base, and their reasoning at the initial point was that people were not willing to pay a fee, any kind of fee, regardless, on content in a market like India, because there's an abundance of pirated content. So people never saw the value of having to pay for premium content because they could get it elsewhere for no fee at all. In reality, what these guys sort of in a short period understood, it wasn't the fact that you had to pay a fee for the content itself. It was the manner in which they were paying the fee. So the guys had a monthly subscription of, let's say, $5, $6, $7 per month. And for the average Indian consumer, it was an amount that they could mentally not wrap their heads around it, until the point where they broke down that fee into a pay-per-view fee. And that wasn't possible without technology, because if you were using the conventional payment rails, it would be too expensive to process a payment in cents. But with API payments, that becomes possible. So once the API payments got introduced, these guys were able to charge, cents for a series or a movie, as opposed to paying $6, $7 a month. And he actually showed us the chart. It was the best hockey stick I ever saw. I mean, it was a massive uptake in the service in like a 6 months period. So that's the kind of leapfrogging that we've witnessed in markets where the conventional, traditional, archaic way of doing business is just unexplainably too expensive for the majority of the people to adopt.
Thank you, Faiza. Eddie, I'd like you to share with us how are different industries analyzing innovation in fintech.
What we know, even from the World Bank, there are 5 stages in the financial transition from the current banking traditional model to reach a level where we are fully ready digitally and fintech ready. So the first one was the traditional banking, and we all know what is traditional banking. The second one was the introduction of the digital access to the funds and to the bank accounts, which was right now, not all countries are equipped with the full services when they access the digitally the bank accounts. The third one, I think Eric also touched base on, which is the mobile money. And what we also traditionally also use, but it's something that could be potentially enhanced pretty much, which is the prepaid cards and prepaid accounts. What we want to move to the next level with that is, after the mobile money has been introduced, we need to start decoupling those systems. And typically we need to decouple the payment system and then decouple the currency from it, so we can be digitally fully ready with so these are the kind of 5 stages, or you can say the 4 stages if you want to include the traditional banking part. Depending on the country, you'll see some of them between stage 1 and stage 2, some of them between stage 2 and 3. We still did not see much stage 4 and stage 5 fully adopted, and typically goes back to the struggles that I was mentioning earlier. But moving forward, I think this is what the population wants to see, and that's why maybe part of what also Eric was mentioning regarding the leapfrogging in Africa is substantial. The moment you start immediately jump from, even before traditional banking, even people who do not have access to bank accounts, to start using mobile money. So you immediately jump 2 or 3 stages and become part of the current economy.
Yeah, thank you, Eddie. So Eric, let's hear your thoughts on this innovation thing, fintech.
So I think that innovation, in essence, we internally, we at times we think that we are what we call in fintech 2.0.
I'm very, very sorry. Thank you so much. It's been really inspiring to listen to all your different perspectives. So thanks again. And the audience, please stay tuned for the next session. It's going to be exciting.